This conference will now be recorded.
Okay, so I'm going to record this so it will be available. To get to those three financial statements, we go through these steps. We analyze every financial transaction the business has, and we make a journal entry. You can't go any further until you've done those two things. You've analyzed transactions and made a journal entry. Then we're going to post them to the ledger, prepare a trial balance, and most times we don't do this step. We just go ahead and make the adjusting interest, get an adjusted trial balance, and then that financial statement falls automatically off of the trial balance. So once we have a trial balance, that financial statement falls out automatically. And so we got a process for doing that, utilizing, the Excel spreadsheet, or we can, you know, if you're having some issues with that, I'll get some regular sheets out, but you want to use Excel because that will really help you as you begin to uh, add up things and get to those statements. It's easy to use Excel, and we'll try to show that today. So we do these steps. We every time there's a financial transaction, we analyze it. Then we make a journal. Then we post to the ledger. Yeah. So and prepare a trial balance. Once we get steps 1 through 4 done, once steps 1 through 4 are done, then we're way on our way. Okay, we're way on our way in terms of being able to finish up and get those statements done. Managerial accounting just assumes, that you can do this. I don't make that assumption, and and looking, I say, decide, okay, we aren't trying to just cover material at a certain stage, but we're trying to make sure that there's an appropriate learning process. And so we're going to look at this process and get you to the stage where you need to be in terms of just understanding this. Because when we get the managerials, they're going to be asking you to do things, assuming you understand the cycle. The first thing we do is to make journal entries. And I ask you to make copies of the transaction types, and I ask you to make copies of the chart of accounts. When a financial transaction occurs, if cash is coming into the business, I label those transactions 1 through 6. So when I talk principles 1, whatever cash is coming into the business, we debited cash and we credited. If it was a type 1, it was always common stock. If it was a type 2, it was revenue and sales. Type 3. And so we read the transaction, we see if it's a 1, 2, 3, 4, 5, or 6. Then once we determine that, if the business gets cash, we debit cash and we're going to credit whatever's over here, whatever's over here. And the key ones, the ones in bold 1, 2, 3, and 5. 1, 2, 3, and 5. Those are the key transactions that, we'll be working with and reviewing. So once again, if something of value comes to the company, it's debited. The company is getting cash. What is it giving up? Common stock, revenue, receivables, whatever. So that's what we're looking at. Are there any, and what this chart is telling us is that what account's going to be debited, what account's going to be credited. If we pay cash out, then cash is always credited. Okay, cash is always credited. And then we have to determine what we're going to debit. If we purchase an asset, you got to say what asset it is. If you pay off a liability, what liability was paid? If you pay an expense, if you pay a dividends, and then we have some refunds and buying treasury stock. Then we have some transactions that don't involve cash, such as purchasing an asset utilizing debt. You debit the asset purchase, credit a liability created, and if there's a sale on account, you're going to debit receivables and you're going to credit sales revenue and fees. And so the items that are in bold are the ones those are the key ones. That's all we're going to review. So when you see a transaction, it's going to be a 1, 2, 3, R5, a 7, 8, 9, a 10, a 12, and a 15. So when you first read those transactions, you're going to you'll be selecting one of those numbers as the type. Now, the other thing we do is we have this chart of accounts. And this chart of accounts gives us the number. So when you're ready to make the journal entry, you got to come in here and pick a number. If you buy an asset, if it's inventory, it's 120 inventory. If it's supplies, you don't debit asset purchase. You debit whatever it is. If you pay on a liability, you create one. There's a set of account numbers there. Common stock, uh, retained earnings, dividends. And basically, this is the balance sheet. These are the balance sheet accounts. Then when we go to the other side, we have the revenues, typically just sales, and then sometimes sales return, but sales. And then we have the expenses. Once you've had all your transactions and you post to the ledger, these NBs tell you what the balance in your account should be. They tell you what the balance in your account should be. And so if sales has a debit balance, something is wrong. If an expense has a credit balance, so you have the normal balance. So we'll have debit and credit transactions to cash, but that normal balance is a debit. Are there any questions at this point?
When you say normal balance, you mean like for cash, it'll be a debit as far as when we do the when we start the trial balance.
Right, when you do the
Okay.
trial balance.
Okay.
So that's a good point. These are the normal balances that are going to be, that should occur on that trial balance. So do we understand journalizing journal entries now? Does everybody understand how to journalize journal entry?
Yes.
Okay. All right. Here are your journal entries. Can you journalize these 10 journal entries? That's what I want.
Yes.
Go make the journal entries then. So pull out a spreadsheet. Does everyone have access to a spreadsheet? Is there anybody who does not have access to a spreadsheet? Okay, so go to the spreadsheet. It's in course content. And I want you to make these 10 journal entries. And your format is going to be You're going to read the journal entry, then you're going to tell me the transaction type. Then after you tell me the transaction type, you're going to give me the accounts debited and the accounts credited. Let me move over some. So there you got journal entry 1. Jameer, journal entry 2. Evans, journal entry 3. Johnson, journal entry 4. Me, journal entry 5. Shooter, journal entry 6. Sydney, journal entry 7. Usha, journal entry 8. Nine, journal Nidbit and, and Karen, journal entry 10.
Professor
We're
Boyd, who
going,
has number 1?
Bay has 1. So you have
And
them
do we only
all.
do the one that you assign?
No, you gotta do all of them, but you know I'm gonna call on you on that one that your name's by. So what I want to do, you have 2 minutes per journal entry typically, but so do yours and do as many as you can in 15 minutes. Now there's some people who should have all of these done in a minute each. So that's Miriam. You have to have all these done in a minute each. And Nadia, y'all got a minute. For individuals who got to present, if you're having an issue, then you ask Miriam or Nadia for some help so you can get that journal entry done. So coming away, I want to make sure everybody can do one journal entry. Good, you should also be finished in 10 minutes. Muhammad should be finished in 10 minutes. But this is a process. And so what I'm trying to do is just not to rush through it overly. If you can get this done, then you can do the other steps. If you can't get the journal entries done, then you can't go to the other steps. So let's take 15 minutes. Let's take 15 minutes. You already finished with yours, Jacob? He's quiet. And so, this is what I did in Principles 1. Everybody had a journal entry, and with everybody having a journal entry, then they learn to work them. I'll put So take 15 minutes, make sure you work your journal entry. If you have a problem, you could ask someone else how to work your journal entry. But we're trying to get through all of them, but I don't want to gloss over it. Everything else will proceed automatically, kind of, if you can make the journal entry. So take 15 minutes.
Sir, can you pull the questions up real quick?
Okay, I'm still having people who are having issues logging in. Let me just- Okay, are we ready to make these journal entries?
No, like 5 more minutes.
Okay, well, are there any burning questions on how to make journal entries? Does everybody have a good sense of how to make journal entries?
No, I need help
Me,
on
sir.
it.
Me, sir. I'm trying to figure out number 3.
Okay. Well, why don't we do this? Why don't we just go through the first three so you can still work, but let's
Okay.
just view so we get a sense. We invested 10,000 in the business. So what are we doing here?
Cash, common stock,
What's our type?
It's a
type
type
one.
one.
It's a type one because that's how we start the company and we invest in it. What do we debit? Cash. What
Cash.
do we credit?
Common
Common
stock.
stock. Now we got to go down here and get these numbers so we have make sure it's going to the right account. Cash is what?
100.
Common stock is what?
400.
400. So our type is a type one. In a type one, we debit cash.
Quick question.
Yes.
Why don't we do type for why is it formatted where type is at the back end and account numbers at the front end? If we need type first, does it matter if we put that first or not? Like if we were making
Does
our
not
own.
matter. We can move it over.
Okay.
Let's just see. That's a good point. That's a very good point.
Because I was just having issues swiping down and then swiping back up.
Okay. Well, in terms of teaching the course, students always come up with things that can make it work better. So that's good. I think that's a good recommendation. I'm gonna change everything to go with that. So I appreciate that. Lease sales entire. Okay, so debits, credits. So I think we'll be okay with it that way. I do like that suggestion. So we said this is a type 1, correct? And the type 1, what do we debit?
Cash.
Cash.
Count 100 cash. Let's try to do this. Okay. And what are we going to credit?
Common stock.
400 common stock. What was our amount? 10,000.
10,000.
So that's a journal entry. A type, an account we debit, and an account we credit, and they both are the same amount. Does everyone see that now? Let's go on to transaction 2. And let's just see. So this is transaction 1. Let's now go on to transaction 2. Cash received for car rental revenue.
Is it type 2?
What's the type 2? Cash revenue received. So we're going to what? Debit cash and credit sales or revenue. Cash we know is what? 100. Sales is 500.
500.
So our type is a type 2. Once again, we're debiting cash, and most of our transactions, involve cash. And we're crediting in this case what? Sales for 50,000. So there's nothing really, difficult about making journal entries, uh, but it's just framing it up. And I think sometimes, uh, as we're learning and teaching accounting, we sort of move through this too quickly. Okay, collection of cash on account from corporate customers. So what this means is that people have our company has done some work, and now we're getting cash. Whenever cash is coming in, it's got to be 1 through 6. So which one is this one? We're
Type
collecting on corporate account fees
3.
received.
It's 3.
So that's going to be a type 3.
Hey, Mr. Boyd, I got a quick question.
Yes,
What's the rule again? You can't have a 3 without a 15?
that's correct. And the 15 is coming down here. Okay. I just got them in the order that they are in the chart right now.
Okay.
But this is the 15, and we'll talk about that. That's a good point.
All right. Because I was like, I'm not about tripping.
Okay. No, you're okay. We're just trying to teach the journal entries now. So once again, we're just looking at the cash ones. We're debiting cash. And in this case, we're crediting what?
Accounts receivable.
Accounts receivable, because it says that in a type 3, you will have a type 3. We debit cash and credit account receivable. We pick up that account number for account receivable, which is 110. What was our amount? 20,000. So hopefully you see, that you've got to be able to do this because all of the steps fall off of this. What happened in number 4?
Type 5.
Let me put my 3 in here, stick it in here. Now we're on number 4. What's a type 5? What's happening? It says we received a short-term loan, so we got cash again. So we go up here, mark money, debit cash, credit notes payable. And let's just see what accounts we have in here for notes payable. We got the short-term note payable in here, 306. So we're going to utilize that. So our type is 5.
307 is short term.
Okay, thank you. So once again, we debit in cash. And we're crediting.
So it's gonna be 306.
Wait, is it 306 or 7? Because 306 is taxes payable, but 307 is notes payable short term.
It's
Maybe it's
350.
different.
It's
Maybe it's
350.
different on some. Let's just go with 307. That's what we have here.
Oh, okay.
307.
Let me see what's on here.
Nah,
350
it's
is most
350.
payable.
It's notes payable. 350. 307 is secured liability.
306, 306 short-term note payable.
Oh
It's
yeah,
a
you're
short
right.
term.
The 350 is when this note is going to be payable within 1 year. It's a short-term note. 350 is the long-term note, like you buy a car or something and you paying over longer than a year. So that was 25,000. Are we getting a sense now on how to make journal entries? Are there any questions by anybody on how to make journal entries? Okay. We purchase supplies paying cash. We purchase supplies paying cash. What is our type?
It's a type 7 where you debit supplies and credit cash.
Thank you, Curtis, but you can be quiet now so we can let the new people do it. But we purchased an asset, that's a type 7. You see this, Mead?
Yes, I do.
Okay. So it says In a 7, we debit the asset purchase and we credit cash. And so supplies is what? 130. So when we get to number 5, journal entry 5, we says the type 7, and we're going to debit supplies, and supplies is 130, correct? And now we're crediting cash. So notice the debit's on top and the credit's on the bottom. This was $1,000. So when cash comes in, we debit cash. When cash goes out, we credit cash. Then we paid on accounts payable $5,000. What's our type?
Type 8.
Payment of a liability. So we're going to credit cash and we're going to debit the liability paid. Well, the liability paid was accounts payable. So we said this payment of a liability is a type what? 8. We're going to debit accounts payable. What's our number for accounts payable?
301.
Take your word for it. Crediting cash.
5,000.
That was number 6, correct? Let's move on to number 7. What's happening in number 7?
Paying rent.
Pay rent. Anybody in here pay rent?
Yes, sir.
What happened to your cash account when you pay rent?
Go down.
It goes down. So we're paying an expense. So it's a type 9. We're going to debit the expense paid, which in this case was rent, $651. So we got a type 9, 651 is rent expense. Notice the debit's always to the top and the credit's down below. Well, we're paying $3,000 in rent. Yeah. What's our next transaction?
Dividends.
We paid a dividend, so now we're on number 8, where we paid a dividend. What type is payment of a dividend?
10.
That's a type 10. What's our account number for dividends?
455.
455. Type is 10. We go debit dividends, credit cash. Crediting cash. And our amount was 2,000. What happens next? On transaction 9, instead of using our debit card, we use our credit card to buy something. So we don't have to pay the cash right away. We'll pay it later. So we don't have to pay it right away. We'll pay it later. What's our type? We're no longer receiving cash or paying cash. So we have to go to an asset transaction other than cash. Instead, go to number 12, purchase of an asset utilizing debt. So what did we purchase? Supplies again, 130 with an account payable 301. So our type is 12. We're purchasing supplies. How much in supplies did we purchase?
8,000.
8,000. And we did that on account. So what's our account payable account number?
301.
301. Account payable. We got one more, correct?
I have a question.
Yes.
Isn't it like a rule? Like if it's like I think it's past 6, you can cancel it, or that's 15. Like cross it out.
Say that again.
Isn't it like a rule? If it's like past 6, you can cancel it, like cross it out, or that's like if it's 15. I may be wrong, but I know in accounting one, like we was canceling out like if it was past like 6.
No, what we said was that when we do the statement of cash flow, we only do the cash transactions. But all you're concerned with now, the ones in bold, 1, 2, 3, 4, and 5, 7, 8, 9, and 10. If you did a statement of cash flow, it would just be these transactions. But a 12 you would purchase out, but that's just related to something else where you're doing that final statement, but we aren't concerned about that. Then we have 15, sale on account. A sale on account occurs when you do the work and you get paid later. So you've done the work. Corporate customers have rented the cars. You're going to build them and they're going to pay later. That becomes a type what? So we're on number 10.
15.
That becomes a type 15. What do we debit on a 15?
Account receivable.
We're going to debit account receivable. What are we going to credit?
Sales.
Credit sales. What's our amount?
30,000.
Are there any questions
I have a
on those?
question.
Yes,
Yes, Mr. Boyd. So I just want to know again, why did we debit accounts receivable for that one, the last one?
because we did the work and we hadn't been paid. So we're saying most times people pay us cash, but in this case, they're going to pay us later, and we're going to send a bill to
Okay.
them. My yard is cut. The people come around and cut the yard once a week, but the owner of the company, he's not coming around, but he doesn't particularly want me to pay his workers. And so he sends me a bill, and when he sends that bill, he debit account receivable and credit sales. We have a 15. Then he's going to come back to 3, like as Mayberry was talking about. Then when I pay, he debit cash and credit account receivable. So you can't have a 3 collection on an account unless you had a 15, a sale on account. You can't collect if you hadn't done the work.
Hmm.
When you do the 15, you debit account receivable and crediting sales now. You already credited sales, so when you get up here to 3 and you collect the money, you don't credit sales again, you credit receivable. You've already recognized the sale in 15.
Okay.
Are there any
Understood. Thank you.
questions?
Sir, is it a cash flow statement paper on do you have one uploaded? Because I lost my the physical one I had.
It is, but we're moving that back to Tuesday, so don't have to worry about that. But it is uploaded.
All right.
But that's just a team thing that's due on Tuesday. So we're continuing with the review. So what are we going to do next? We got 10 journal entries recorded. What do we do next?
T account.
So what are we going to do next? Put these in T accounts.
Yes, sir.
Okay. So what are we trying to do when we put items in a T account? See if I got a spreadsheet here. Clear content. Okay. So every time we have a journal entry, we now need to know how much cash we got and how much is in every other account. So when we have a journal entry such as debit, cash, and credit common stock, we're going to post that. If it's a debit in the journal entry, it goes into the T accounts as a debit. If it's a credit in the journal entry, it goes in as a credit. So on this first transaction, transaction 1, we're going to put a debit in here for that cash, $10,000, okay? Then we're going to put the credit in common stock for 10,000. So we can keep up with it and check for errors. We're going to put the journal entry in these little boxes here. And that way, if for some reason we make a mistake, we can trace our journal entries in. So I'm going to encourage you always to do that. Let's go to journal entry 2, cash sale. We debited cash and we credited sales. We're going to go to the cash account and put 50,000 in here from journal entry 2. That's 2. And we're going to go down to sales and put 50,000 in. Is that clear what we're doing? Does everyone understand posting to the ledger? For every one of those journal entries, we've got to go and post those. Okay? We got to post them as debits and credits. Okay, so what we're going to do is to pick up on this on Thursday, on this problem. And what I want you to do is to post the account to the ledger and try to get a trial balance. So we'll just be, I want you to see if you can put all of these accounts, post them in here. And once you post them in, you're going to add up all your debits. And you're going to add up all your credits. Well, we paid $1,000 for supplies at an entry. Didn't we do that? So I'm just going to put that $1,000 that we paid in supplies. I think that was journal entry 6, I believe. Well, I'll let you put it in. So then we come in here and we ought to sum these. Keeps jumping around. And then to determine the balance in the account, to determine the balance in this account, I'm going to come down to here. And we're going to put in a formula. First thing in that formula is equal. Then we open the parentheses and we click on that sum. We put a minus sign in, and we click on this account, and we close the parentheses. So now this, you see, this is why we use Excel. It's going to come up with this for us. Notice what we did. We added the debits, we added the credits, for partially where we were, and then we put the balance on the side of the larger. And then when we go to the trial balance to see if we're in balance, we're going to have cash. And whatever is in cash is going to go on the debit or credit side, depending on where it is in the T account. So right now, we would have a $59,000 debit. So I want you to post all of those transactions and give me a trial balance that's balanced. Are there any questions on what I want? Are there any questions on what I want? So now we're going to go through it in detail. But if you can knock out the trial balance, then you're going to see it's going to be very easy. Now, when you do your trial balance, you keep it in the order of the accounts in the chart of accounts. So cash is first, then all the other assets, liabilities, retained earnings, dividends, sales, then the expenses. You keep the accounts in that order that they are in the chart of accounts. So you don't put common stock here. You have common stock down here in that order. Is that understood? So we're going to post all these next time. We'll let you think about journal entries. Get that trial balance. And then we're going to be able to lift those financial statements out automatically. Are there any questions?
Mr. Boyd, I
No.
do have to talk to you after class.
Okay.
I need to talk to you after class as well. No question.
We'll have my folks coming with their out of class assignment. They're still there. Brooke, Karina, how's our out of class assignment coming?
We need to speak to you after class.
Okay. Okay. Who's the first person that needs to speak to me? Who's that? Okay. Yes, Miriam.
So you said the problems we were doing in class, that was 10 journal entries, right?
Correct.
So what was the in-class review that's on Blackboard? Because that has
That's,
13.
that's another one. That's a different one.
Mm. So I've been doing those.
Doesn't matter. Doesn't matter.
Okay. Okay, I just wanted to check because I looked up and I was looking at the paper, and number two I had like a loan, and the other one was it wasn't the same, and I was like confused, and I didn't want to stop the middle of class for it. So
I just
I was like, I'm
decided
just ask later.
to do that one because it was simpler because people,
Mm.
need that. Then we'll go to that one next time.
Okay, so it's okay for me to just finish it anyway.
Yeah, that's fine. Yeah, and then that way
Okay,
you have the answers from me when we go. Who else had a question?
Mr. Boyd.
Me, but I can wait until the end because I need to talk to you privately.
Okay, let me go ahead with the folks who are in the breakout. Breakout people, speak. Got your cameras on and speak.
Oh, boom, boom. Dr. Boyd. Okay. For this program thing, the proof that is a little expensive. How do you want us to do that? Okay, so it's gonna be $50 a month
For what now?
for just the essential, for the proof of for the essential package.
Is it going to be 50? I thought it was free, started off free, but it's 50 a month.
Okay, so it starts off free for 14 days,
Okay.
but it's 50 a month going on. That's the essential, and the complete package is gonna be 100. I don't know which the difference really is or what you want us to use, but yeah, it's 50 a month. And I don't know if you want us to do that separately, like individual teams, or are we supposed to use that as a class, like a
The
whole?
plan was to use it as a class and that there'd be different projects. So that's what so go through and investigate it and make sure, I'm pretty sure it will handle different projects. We wouldn't have to pay that for one. So just see how it would operate, see what would happen, and then I'll work
Yeah, I
on
think
it.
you
And
get 40 projects.
beg your pardon?
40 projects for yeah. I think you can up to 40 projects for the
Oh,
essential
we
package.
only have 10 teams.
Yeah.
So with 10 teams, then you lay the project out on one thing and then all the other class assignments out on the other one. And I'll check on that. We may have that at the university also, but I'll check on that. But just see how it would operate for now. Then we'll take
Okay.
care of the money later. We'll let those Moan sisters pay for it. Let them get their mother to donate it.
Yeah. Yep. Sounds good to me.
Okay. Anything else?
So, yeah. What did you want us to specifically do while we were in that breakout room though, other than like?
Delegate it. Dedicate those 3 items and break it up so each individuals are working on it. So on the 3D printer, go online and research what that printer can do, and then either talk or visit the instructor and see how we can utilize that. It sounds like he has the raw materials. So the main thing you're looking at is what kind of products can each team make based on the raw materials that they have. So
Okay, so we have to talk to him about that.
correct.
Okay. And then what about the app? Is that just basic information?
Where's our marketing major? So our marketing major definitely will be on top of that to go and we want an app for each product, and then we want to so we come up with a class website, and then each team would create a marketing app for that product, utilizing. And I think you start off free with Apple Pie also. So I would check on that and see, we have that on campus. Right now we're just trying to see how we operate it. So I got you all's teams doing that.
Okay. So look into those things.
Any other questions?
And then we have to do our own teams. This is
So
a
what?
project for us, and then we still have our own teams to discuss what product we want to do it with. We have our
Yeah,
own
yeah,
teams, like we have to still come up with a plan for our own teams. But this is
correct,
the project
correct.
for us.
Right. You're coming up with the process that the
Okay,
teams
just
will be
making sure.
utilizing. So you all doing the preliminary legwork on it. Then each team will follow from that. So you all have Thursday free to finish this up. Then I'll expect a report on next Tuesday, an operational report. So y'all getting a break. And congratulations to Valenciana. She's the only one that got journal entry 1 right on y'all's problem. So she knew it was treacherous stock, the only one that did that.
Would I had to do a long process to figure that out because my debit and credits were not matching.
But you did get that journal entry right. So we want to applaud that.
I don't even know what happened in number 14. I don't know how she did that. The brain.
I said the first one. Now Kiana was working on number 14 since she said that the explanation wasn't clear, and she's gonna clear that up and let you all uh, give you all the process to work that out. That's what she said.
I know she helped because I don't know what the heck that was. What she was that was tricky. Because I looked it up on Google and it said do all of those, and I was like, there's no way it could be all of these. So I was like, no, forget it. So it's not gonna be all what like four entries,
4 counts. It's going to be
4 counts. Yeah.
you're gonna have a debit to cash. You're gonna have a credit to equipment. You're gonna have a debit to accumulate depreciation, and then the gain or loss that's gonna fall out based on what it takes to balance that journal entry. So if the debits are less than the credits, you have a loss. If the debits exceed the credits, you have a gain. So, Ms. Moan, how are we coming on laying that out for explanation and clarifying that?
Good. I'm gonna send it to the rest of the class. I sent it to the leaders for them to see if they understood it.
Well, let's work with the leaders and make sure they don't sound like they understand it.
No,
So
I
that
get. She sent the explanation. I got it. It was just confusing at first to look at it. When she first sent it, I was like, "Yeah, I would have never got it."
got to have a little challenge there. Got to have a little challenge there and everything. But so I'm looking forward to you all making those products, and then people gonna have their money to buy them. So y'all gonna have apps and everything. So part of your grade would be how much money is spent on your product. So you got to have a very good marketable product. Doesn't that sound like fun? Okay. So if you all need to sign in on Thursday, that's fine, and go into a breakout room and I meet with you all, that's fine. So just let me know. But I'm depending on you all. Wouldn't want to be bored, would you? You wouldn't want to just a little boring course, just working problems, would you? All right. So you all have a good one. I need to talk to Miss Johnson of a couple things with her, but challenging, interesting semester, just not boring at all. So, Kiana's just laughing.
All right. We gotta get to class.
All right, get to class.
Later,
We'll talk to
professor.
y'all later. All right, so go. If you all will go ahead and sign out, I need to talk to Ms. Johnson. I think they're finally gone. How's your mother doing?
Oh, she's doing good. Thank you for asking.
Okay.
So I tried to complete the group assignment that was due this morning.
Mm-hmm.
I know you added Lindsay to the group,
Mm.
but basically I ended up doing it by myself.
Thank you.
Um, yeah, and I didn't complete it because honestly I didn't know what to do. I asked Brooke for help. She helped me a little bit, but I still wasn't understanding everything. Um, but Sydney and Anaya, they responded, but
Mm.
they didn't contribute to anything. They said they were confused as well, I guess.
You-
And the Maya just never responded. So yeah, I'm not sure how this is gonna work.
Well, we can, eventually we'll reconstitute the groups. I just had to initially, constitute the groups, and if something doesn't work out, then I'll just put you in another group. Got it.
Okay.
Now,
Yeah, because I know I'm
you're,
gonna need help trying to do everything. Not even saying I need help to complete it, but I need help to make sure that I understand it myself as well.
okay. How did you do today?
I did good today. I understood the journal entries. That's not my problem. I know how to look at the charts to make sure that's what it is. My problem was trying to convert it to the trial balance. That was a bit confusing. I know to add the credits and the debits and then take what's bigger, I think.
Right.
Um, but my things they didn't equal out last night. My debits and credits didn't equal out. Um,
So, were you doing which one were you doing last night?
on the number one, from the continuing students that we did last class.
Oh, you're just doing those first five, those 4 or 5 journal
Yes.
entries? Okay.
Mhm.
Did you send it in?
Yes.
Let me see if I can find it right quick. I hope you're enjoying the class and that you're
I
learning things.
am. I
Good.
am.
Uh, you say you submitted it?
Yes, I submitted it this morning, right before class.
Well, I don't see it. Oh, here you go. I have to run the bottom. So you have 5 journal entries.
Mhm.
See if I can download it. You debit the treasure stock credit cash. You debit supplies credit accounts payable. Debit inventory cash and credit sales. You debit cost of goods sold. Credit inventory salary spent. Let's go to the T accounts. Did you put in all your beginning balances?
Yes, but I couldn't keep the font red like you were saying for some reason.
There it is. What happens is you have to put it in, then you have to come back and make it red.
Okay.
It won't just stop. Okay, so you have all your accounts in here. Then you get to your trial balance. Aha, look at that salary expense. What's the normal balance of an expense?
Um, I thought it was a credit, so it's a debit.
Yep, remember, expenses, once you work through them, so I can spot that right away. That's on the wrong side.
Okay.
I don't know if that's the only thing. So now I'll go to T accounts, credit salaries, that's number 6. And you got a credit in cash too. You see what you did? You got a credit here on journal entry 6. You got another credit. And it should have been what?
It should have been a debit.
Yep.
Okay.
Let's see if that's your own error. If you look at your journal entry, so you debited salary expense and credited cash. See what you did?
Mhm.
So your T accounts, it's got to be the same way. So you needed a debit salary
Okay,
expense.
I see what you're saying. Okay.
Then let's go in here and take this copy, paste, clear content. Still not balanced though. But we got that straightened out. Is there anything else? Most valuable accounts quit. Let me see if I see anything else in your T account. Oh, you see inventory?
Yes.
Took care of this. Should be. Wait a minute, you had 2 debits and a credit, so you don't have a balance there. Thought you had inventory, you got it at 450. Let me just see if I can pull up somebody else.
Okay.
So they had a 3293. So here's a little bit larger. Cash is the same, receivables the same, inventory the same, supplies the same, equipment, depreciation, accounts payable, notes payable, common stock, treasury stock, sales, 260. Oh, okay, let's see. Look like this is the same.
Yeah, I was just about to say it looks like it's the same now that I moved the salary expense. Okay, yeah, now I'm getting the same number.
Okay, so it just, okay, so sometime your formula being there and keep it from balancing. So you just had one thing off. Then once that was
Okay.
done, okay. See, I knew that you had that ability. Go ahead and need and pick this stuff up. See, I'm a good judge of
And
transcripts and comments. So you only have one thing off.
okay. And so from there, then I go to the income statement.
Think you can do an income statement?
Oh, I'm just asking what's the next step.
Yeah, you do an income statement.
Okay.
Let me just show you something. Okay, on an income statement, all we're going to do is take this sales and put here. Is this yours here?
No.
Okay, right. Okay. Is this yours?
Yes, because I didn't. Yeah.
You didn't keep it in order. So I'll show you why. So you got the same numbers. Okay.
Okay.
They know to keep it in the same order that it is in that chart of accounts. I'm going to highlight this in red. Everything from sales on down goes on the income statement. Put this in blue, I guess. Everything from retained earnings up goes on the balance sheet. So when they got ready to do their income statement, they took the sales number, they put it in, and they took out the cost of goods sold and the salaries, and they had a net income. So if you
Okay.
got these in order, all you got to do, sales, less cost of goods sold, then less operating expenses, net income. Got it?
Yes.
Retained earnings statement, beginning retained earnings. You're gonna add the net income. You're gonna we didn't have dividends, so it's gonna be 280. So when you get ready to do the balance sheet, this new retained earnings comes on the balance sheet, 280,000.
Okay.
So when we do the balance sheet, all of that stuff at the top uh, comes on the balance sheet. So cash, account receivable, inventory, supplies, and equipment, less accumulated depreciation, all of that stuff at the top. Give us the total assets.
Okay.
Then we put the liabilities in. Then we put in the common stock, the new retained earnings, not the old one, but the new one. You want balance, less the treasury stock. And that's how they went from 1,140 to 2,163. Now you notice that they were putting in a beginning balance, which would be those preliminary numbers. Then they
Mhm.
did the year balance. So let's see if I when you put those numbers on the trial balance, they got to be in the same order. Assets. Then you can pull these out and do the top of the balance sheet. Liabilities, stockholders' equity, common stock, all the way to retained earnings. Everything from retained earnings up is going to go on the balance sheet. Then dividends comes in. And now we're at our revenues and expenses. So revenues, then expenses. Your trial balance needs to be in the same order
Okay.
based on what account you use. Got it?
Yes.
So I think you better leave that team if you can just get some numbers.
Yeah. So will I be able to redo it? Would it be okay for me to resubmit it?
Yeah, that's fine.
Okay. Okay. Thank you so much.
You're welcome, and keep up the good work, and we'll sort the team thing out of it. There'll be other teams where people would drop out, so that's not a
Okay.
big. Okay, so we'll talk to you on Thursday. Have a good
Okay.
evening.
Thank you. You too. Bye bye.